Good morning. It is Friday, February 21st, 2025. This is Option Pit Live. I am Mark Sebastian. I am your only option. This week, I am joined by one Viking of volatility, the one, the only, Andrew T. Giovinazzi. Good morning, Andrew. How are you doing?
I am doing well. It is a sunny Friday in Maine, but chilly. Burr.
I mean, people are freaking out down here because it's in the 30s.
Oh,
So,
do you have snow?
but what we
Do you have
we got a
snow?
little sprinkle, but
Okay.
no accumulation. If there's a microcosm of an accumulation, they just cancel everything here in Texas. It's just like there's snow in Texas, shut the state down.
The one of my favorite things is watching cars on the interstate around Houston with those big, ovals, and everybody just.
If you've never
It's
driven in
quite something.
Houston, that one interchange is, even for someone like I'd been, who's driven for 20, oh my gosh, 30 years, almost, going on 30 years. Driving into that giant interchange in Houston is, it is something to behold.
It is a thing of beauty. It is a thing of beauty.
It is an engineering marvel, if you will. Speaking of marvels, the data coming out actually after the bell today. In terms of economic data. So at 9:45 a.m., we're getting PMI, the flash services and flash manufacturing, and then consumer sentiment and existing home sales today at 10 a.m. Eastern time. I feel like that consumer sentiment one is one to watch. Which of these are you keeping an eye on today, Andrew?
Yeah, because I think the sentiment is probably from the last month, maybe, right? When they grabbed this stuff. So it's like sort of January, like February. And maybe it'll be a referendum on the new presidency, Doge, and all that kind of stuff. See what consumers think. And I think that will be the big. Also, is there some confidence in purchasing? Did it have the tariffs? Like you got the Doge one way, tariffs the other way. You get kind of these, as we have seen, conflicting stories, right, for the market.
Yeah.
And stocks have basically, that we'll talk about that in a little bit, but their intraday, it caused some, and yesterday, we'll talk about this in a second too, but so I think for listeners, what do you think? Do you think the last month have been a positive or a negative net? Throw your opinions in there in the chat. But I mean, overall, you're very close to an all-time high. So I'm just going to read the tape, and the tape says up a little bit on balance, basically.
Well, yeah. So let's take a look at pre-market. Pre-market, we're up about 3 points in the S&P, so essentially kind of nada. The NASDAQ futures are currently up about, 1/3%, 75 points. Russell 2000 futures are currently up 15. The Russell's leading the way this morning. Russell's up almost 0.7%. And then last but not least,
that laggard to sort of kick it too.
What's that?
It's been kind of a laggard relative.
It's been a laggard for like 10 years.
Oh, that's right.
Every year, someone gets bold and is like, "This is the year that the Russell 2000 explodes," and then never happens. And then that person goes, "Well, I learned my lesson." And then somebody new goes, "Oh, look at the underperformance of the Russell 2000."
Right. And you would think there's a lot of small to mid cap stocks that would grow, right? And then I think, and this is a big, you can't ignore, like, okay, where'd all the money go? Big tech. And it's not that it's, it's not the first time in history it's happened, but they're still looking for, Amber market is choppy recently. But money is still, it's not going there as much. And I think you can make a little argument that we're kind of having this immaculate rotation, right? So as we gently move out of the bigger names.
The immaculate rotation. I like that.
So, which everybody, there's another 10,000 stocks to buy, I guess, instead of instead of the ones which again still huge growing companies that make money. But
how are those pieces going to come together? Yeah.
So
things are looking like marginally higher, maybe a little bit, a little tech driven. Dow futures down about a little less than 0.5%. So, a little bit of a give and take there between the Dow Jones and what's happening with the Qs, and that's giving us an S&P that's essentially flat.
Right.
So, what now let's with Licia out today, let's just talk about a couple of the kind of interesting stories out there. Okay. And I wanted to start by reviewing a couple earnings that came out this week, notably Palantir. It's been the hottest stock. It feels like you look at the last 2 quarters that Palantir has had, and this is a stock that 6 months ago was $32. It's currently $108.
It is
currently $108. And
this is a happy accident stock for me.
Yeah. Now they had their first trip up in what feels like all year. Yesterday. They've got some defense contracts being threatened, defense budget cuts. Are they really a threat to lose serious dollars here? What are your thoughts on the Palantir story that came out?
Well, I think the defense thing, and that's spilled into a lot of defense stocks, right? They're like, they're going to, the reality is the government's got to cut spending because they spend $2 trillion a year too much last year. So it's
the F-35 has been the biggest debacle in procurement history.
And it's going to be replaced by drones anyway. So it's one of those, like, reality has to set in. It's just how long it's going to take. So Palantir, again, it's trading 100 times sales, and but all those metrics. We've seen a lot of stocks do this. I've been doing this for 35 years, you 25. It's like, we're not getting any younger here. But how many times we've seen the market loves a stock, takes it to a huge multiple. Everybody's like, oh, this is the next big thing. And then, eventually there is some kind of multiple catch up. Maybe NVIDIA is the only one that's kind of been skating that right now. But it's starting to get to I guess the earnings will come out there. We'll talk about that later. But also the CEO is selling some stock. But, the stock's up tenfold in a year, and you're not going to sell some. All of a sudden he might have had $500 million worth, and now he has $5 billion.
Yeah, he's just saying for wealth management purposes, I'm assuming, correct?
Yeah, or is he's going to sell whatever amount, $1 billion worth at this price level through the next year. So,
love you too.
You need to sell stock to get cash to go buy, to invest in other stuff. So I'm sure at this point, that's kind of, he wouldn't be the first, guy to do that. So there was that. And I think kind of like how news goes in for me, news goes in threes. You got kind of three chunks of, bad news or maybe slightly negative, and everybody's like, and then they kind of hit the exits. And the stock was just $125. So it wouldn't surprise me to see the stock settle back into the 80s or 70s over the next, 2 to 3 months. Just as the market starts to find some things that might be the next stock that can go up. So But it's still a growing company. I got out of 90% of my shares though, between on the earnings print, and then I think it traded 115. I got out of another. I still have 100 shares left, so I'll keep 100 shares for giggles, so I don't feel like an idiot if it keeps going up. But
right.
But at this point, it's a $100 billion company, and they sell what $3 billion worth of stuff a year. So
yeah. You made a lot of
money.
And
revenues could double next year. It'd be like, okay, well, you still got a ways to go.
So speaking of performers and stocks that walk on water, that's what we thought Meta was until this week. Meta literally, I believe, went 23 days or something ridiculous, not closing up on the day.
Lewis, you can share. You can show my screen if you want.
It was one of the most bananas things I've ever seen. There you go. And then, I thought it was looking a little bit overstretched. Has come back to the 21-day moving average. But there's a lot to fall if this thing is going to kind of, mean revert to the normal rally cycle. What's your outlook on, is this just like a little bit of a healthy reset after getting a little overbought, or is this a harbinger of potentially more selling, Andrew?
Yeah, I would put this in the healthy sell-off category. I think last year, what was it, $300? If we go 1 year chart,
this thing has just done absolutely phenomenal.
Yeah, so you have to give Zuckerberg credit. Whatever you like him, don't like him, whatever. But when he turns this company around, I've seen him do it 3 times, right? So first time moving Facebook to the phone, he like all resources to that. That was in 2012, 2013, and that started. And when I saw that, I'm like, this thing's going. So that was a nice run to like $300. Then Apple screwed him basically, and he had to redo the business, went all in on the metaverse, all at the wrong time. And he's like, wow, this ain't going to work. So we have to retool and do it again. And he does it. I don't know what he does, but he's somehow
definitely a chameleon. And
he can do it. So and right now
chameleon.
You're on that second run, of going up here. Now, what will Facebook look like in the AI world? With there's Facebook Marketplace, there's Instagram, there's all the products, and I'm just going to assume he's going to get better. AI is going to be better at advertising and all the other stuff. So I think at this point, it's priced as a pretty decent growth stock. But again, up here now, it kind of just floats around. Is it going to double again? I think that would be not this year, but
unlikely. Unlikely it does that.
But 5 to 7 years probably. I mean, it still grows despite its size. And
Instagram, WhatsApp is the one that they really haven't. They haven't fully if they really figured out how to monetize WhatsApp,
right?
That would be
right, because then it's competing with Skype and all that kind of other stuff.
Yeah.
So I'm sure one thing that big tech has shown a way to get good at is they might not monetize the assets that they have right away, but they certainly figure it out after a while. So
yes,
but this was but very, again, I think this is, it might even be a decent put right, like, dipping down, like maybe sell some 600s or something like that. When, it's like one of those when the thing dips, but growth is still there. It's back on the growth track. So that ain't going away.
Yeah, looks good. All right. And, obviously, so, Palantir, Meta, we've already kind of hit on tariffs and defense spending a little bit. I want to look at NVIDIA. I want to preview NVIDIA earnings. So NVIDIA is currently $140, almost exactly $140.
Okay.
And, mind you, this is the second largest company in the world by market cap. And I think the most currently most watched. Normally, for their earnings, they price in about a 6.7%. They're currently pricing in 6.8. So that's the kind of the market makers and the way they're balancing order flow is coming out to about that.
Right.
So that tells you they're not really looking for a kind of out of bounds move from where we normally, where NVIDIA normally moves. And if you look at their last few earnings cycles, it has not been, the last earnings cycle, it moved 0.5% at the end of the day.
Yeah.
That could be affecting things. Previous earnings cycles, down 6%, up 9%, up 16%. What I'll tell you is, generally speaking, when NVIDIA outperforms the straddle, it is to the upside, not the downside.
Right.
The last time it outperformed what was being priced in on a down move was February of 2021.
Yeah, you have to go way back.
4 years ago was the last time that you could buy the straddle, the stock drop, and you make money.
Right.
And for those of you that don't know what a straddle is, that is when if I buy a call, let's say if I buy a 100 call on whatever stock you want to name, I want the stock to go up, right? Well, if I buy a put on that same strike, then that put wants stock to go down. So when you put them together, long put, long call, you end up with this V shape, where as you want to kind of run away from the strike, you want the stock to move, but that is what a straddle is. So straddle is a bet on how much between now and expiration is a stock or index going to move up or down. And in this case, they're pricing in about 6.82%. What are your thoughts here, Andrew?
I think we're going to have a very similar meh earnings. They're going to sell a ton of chips. The outlook will be, we just saw the CapEx stuff from the big, all the big tech. Everybody's still all in. Whatever this DeepSeek was, they forgot about it. But the reality is again, NVIDIA's catching up to its multiple. So, maybe you get $4 or $5 at this point, but $4 or $5, like you just said, on an almost $4 trillion market cap.
It's a lot of money.
It's a lot of money. So, yeah. I mean, how great, like I like one of your lines last year, all year. Everything is priced for perfection. So you need perfect. You need better than perfect. And Jensen knows how to talk it.
He does.
As good as Musk talking about their, prospects, maybe better.
He does. Although what I would note is that, obviously this is a small sample set, but the sample set with NVIDIA as a $3 trillion company, last couple earnings, it hasn't really done very much on earnings.
Right.
And then if you had bought a put, not the day after earnings, but the day after earnings,
you made some money
and sat on it for like 3 or 4 days, you absolutely crush it, because NVIDIA does tend to get a little bit of post-earnings selling, not the next day, but 2 days after their earnings typically.
Right.
And so there's an opportunity to potentially, that's a strategy to attack NVIDIA, is to look for that setup, because it can be quite.
Yeah, and I think the volatility gets pretty low. It's a good idea. Ooh, wow. Yeah. You know what? We can look at that. That's a nice setup for next week for us.
It is a nice setup for next week. Speaking of nice setups, there's no nicer setup than when you catch a ride in the world's fanciest vehicle. That's right. It's Andrew's trading vehicle. This is where Andrew is going to dig in to volatility and take you a little bit deeper.
Thank you, Mark, for that excellent introduction. So that's a stock we liked when we first started this show last year was Hood. I still own shares. Haven't sold any. Unlike the Palantir, mostly because the growth is crazy still in here. So whatever Hood has done, so Robinhood is Robinhood Markets. I will show a couple things that are kind of interesting over the last 3 months. So again, you had this earnings were pretty fantastic. So you had this huge 10 spike in 10-day volatility, again, from the earnings, but then you had this kind of huge sell-off. Profit taking, whatever. But a lot of the growth in this stock has been, from earnings. And I think that makes an interesting, a very interesting prospect because, stocks, especially in like the $0 to $100 billion kind of category in a growth phase, stocks feed on earnings. And you also are seeing, implied vols here at a 3-month low. So I look at this and I say, I think recently we've had a sell-off in the financials just because of the employment and stuff like that. They kind of hit all the financials like in Moss, and Hood got smeared with it. And I think this is an opportunity to actually buy some calls and look for a little run back up. I was looking for relatively inexpensive options right around the, $1.50 range. These are already starting to lift this morning. I was looking at the March of 760s. I kind of like them, or even a little farther out in duration, but I like the 60 strike. Again, right at about a 60 vol. I don't think this stock has been under a 60 volatility. Let's see here. So I'm going to go. So I'll show you what I look at. So when you're trying to figure out, okay, how much do I want to spend for some option prices? So here's 60 volatility for Hood. We've had a pretty good, ever since we kind of had this, the earnings actually were good here. And then the market, I don't remember, this was like going into the election, everybody was feeling kind of scaredy cattish, and then everything sort of launched again. Bitcoin launched again, but we really haven't seen 10-day volatility dipped a little bit into this rally, but I don't think 60 volatility right now is too bad of a price for buying some calls, especially when the stock, recently has been kind of making these bigger moves. So it wouldn't surprise me for the stock to go up $3 or $4. So I don't think there's a bad time to buy some cheap calls in here. In Robinhood, there you go. I think it's a stock that will see $100 probably in 2 to 3 years. And that is Andrew's trading vehicle today. And I think Mark has something for us, if I am not mistaken.
Yes, I do. So Andrew, I wanted to spend a couple minutes. So one of the most frequent questions we get is, what's our day like? And, why does it feel like you guys kind of, are so on top of the market when, we're just, sitting at home looking at the same charts as everyone else, and the answer is preparation and having a plan. And that's really what kind of the beginning of trading is all about, like setting up your routine. And then part of that routine is then what are your levels in the market? So, Andrew, I know I've got a routine. Do you have a pretty regular morning routine you hit on every day in terms of getting ready to trade?
Yeah, I mean, the most important thing is, do you have everything ready for your open positions? Meaning, okay, where do I want to get out? Okay, where do I want to hedge? Maybe some stocks. Where do I want to buy a little stock? So anything you have open, to me, gets number one priority. So have your open positions number one. Anything you might have open,
yes,
have a plan, have stops, exits, good till cancel orders in. I use a lot of running and trailing stops because, when we're doing shows and doing all kinds of stuff, I don't want to get overly sidetracked watching something. And it's not optimal sometimes because, if you're watching things yourself, sometimes you can do a little better, but it's better just to make sure you get out according to whatever your plan is instead of, getting run over. So I think the most important thing is make sure you manage the name.
Yeah,
whatever you got open.
Absolutely. And all right, so once you've got kind of yourself fully organized, the next is to have a game plan for the actual market. And this is where kind of the rubber meets the road. So now you're fully prepared, but do you have the levels that you're looking for in terms of trading let's say SPY? Where if SPY moves so much higher, where do I want to go long? If it moves lower, where would I want to go short? Zero DTE has taken over this market, and it's become one of the biggest approaches to in retail trading. That's why we have a zero DTE service here at Option Pit. And one of the things I do with zero DTE is have that game plan. Where are those? Where are those coming from? Now, where do I develop that game plan? Well, it's me and Vaz. Vaz has put together some really awesome proprietary levels that she uses to tell not just me, but everybody when to go long and short. And what I'd like you guys to do is to learn about it. And the way you can do that is by checking your email boxes, joining the Option Pit email signups, right? I send out a newsletter almost every day. It's called the Trader's Edge. Go to optionpit.com and give us a register. Watch those emails and be on the lookout for an invite to a special presentation Vaz, myself, and Hannah are going to be doing very soon. Or you can click the link that's in this chat over at on the OP Live page. So there you have it, folks. The market, you've got to have that morning plan, and then you want that game plan for trading that day. The best way to do that is with the game plan by Trade to Close with me and Olivia Vaz. All right, Andrew, it is 8:30. The bell has just rung.
Ding, ding,
on
ding.
The open, futures get a little bit of a dip. We are currently down about 6. So the SPX, obviously it's expiration today. So SPX kind of printing lower on the print. So the S&P options expire on the opening print of every single option out there.
Right.
So you got the SPX options, S&P down about 5. The Dow Jones is down about 250 points.
Might be UNH, I think.
Yeah. Qs are up. So the triple Q is still up. And obviously IWM, which was our early morning leader, still up about 0.7%. What do you think for the rest of the day, Andrew?
I feel like this is a meander day. We got to wait for some data to come out. If the market likes it, but I feel we're kind of back to like good data is good for the market, bad data is bad for the market. So I think we want to see healthier numbers today. So
yeah, absolutely.
But I think they'll be okay. I think they're going to be kind of lukewarmy. I'm feeling lukewarmy today.
Yeah,
I have to say.
I think they're gonna pull us up to 6150 by the end of the day. That is where all the open. That's kind of where either 6100 or 6150 is where we're gonna land. But there is a lot of open interest on the here. Let's see. There's a lot of open interest on and volume on that 6150 strike from yesterday.
Mm-hmm.
And that is, what I think is going to be interesting and is going to drive trading the 6100s. Yeah, there's a lot of activity on the 6150s in the first minute or so already. So
right.
I just feel like once they get this AM settle out of the way, they're going to step in and kind of pull us higher.
It wouldn't surprise me because this is America and stocks go up. All right.
It is America and stocks go up. So speaking of America, we're going to see you, America, next Friday at 9 a.m. Eastern time, like we do every Friday. Don't worry. Licia was on assignment today. She'll be back next week. So for Andrew T. Giovinazzi, our Vicar of the VIX and Viking of Volatility, I'm Mark Sebastian. I am your only option. Happy Friday, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.